We need to get right into the SP 500 and the Nasdaq 100. We saw a really nice bounce into the day. And then obviously things took a turn for the worse as the market opened. We've been talking about this. I told you yesterday I had SPY puts, and guess what? They paid on the day. We need to talk about exactly what's happening tomorrow. We have some news coming out, just so you know. But before we get into that, I have to ask you to consider doing two things: liking and subscribing. Every single day I'm going over the market, breaking down the key levels and the news that will be coming out as well, so you are prepared. Again, every single day, no matter what shows up. Let's get into it. So what we're going to do is go over what's happening here. And I'm going to go over the 5 minute and 15 to really break down the intraday action. And then I'll go more long-term time frames of where we are right now. Now, on the day I traded the SPY puts, I ended up getting out locally down when you started getting into this demand level once again. And then you kind of started just chopping further and further towards the downside. So what's happening here, and ultimately what's setting up for the market as we speak. I've gone over so much news, and if you really want to follow the news that I'm talking about, I recommend getting on our Twitter. Okay, so Twitter, the link is down below. We're constantly updating this. Jokes are there as well. But if you want to get with the news and you want to follow who I'm following regarding that news, I recommend doing that as well. So going into this, we had that nice drop, but we again find buyers holding us up. So if we go back to like the 1 hour, yes, you're making lower lows. You need to understand that. That's a major part of what's happening. Let's actually clean this up just a little bit so you can see a little bit better. As you're going, you're making lower lows, lower lows, lower lows. This indicates you are still in a bearish trend. You are not making higher highs either on these pivots. Yeah, you're trying to get a push up, but ultimately you are still on the trend making lower highs. Now, on the intraday, yeah, you're trying to make a higher high, but it's just completely and utterly disgusting. As I mentioned yesterday, you came into that supply level. At the end of the day, you hit it once. This was, I believe, the 26th, coming into the 27th, and to yesterday, the 28th, and boom. It's the same trade over and over. I told you guys, I'm not looking to take puts when you're down here. We're looking to take puts when you're up here. Why? Because the risk to reward is there. Over and over, the same trade, repeat, repeat, repeat. But ultimately, the question is, and why you're here is, are we going to make new lows? Are we going to establish this crash? Are we going to break below this June? This is the low from June right here. Or actually, no, it's not. I can zoom out just really quick so you can actually see that. We'll move that down to here. That's your June low right there. As we get into this, the question is are you going to start breaking below this level? When you go into something like SPY, you've already seen we have broken below that level and continue to bleed here on the market, trying to get some love, but we continue to get rejected here over and over and over. So the question is now, or is this going to continue? Are sellers going to start actually stepping in? And that's what leads me into the next part of this, is when we talk about the options chain and bookmap. Option chain specifically, SPY, what's happening here? End of the day, I want to talk about, again, the same buyer, in my opinion, that continues to show up and most likely is a hedge fund, right? So we have right here, I want you to watch right, no, not right there, right here, this contract, and this contract. You can see as we zoom in just a little bit, you can see 4.7, 4.7, 4.7 at the end of the day at close, 346 puts. Again, over and over, we're seeing a lot of put volume stacking up. And now you're seeing it roll over into as well November and December. Okay. Again, they're dominating the market as we speak. Going into Qs, what's happening here? You have one call option that's coming in there near lunchtime. But besides that, lots of puts, a lot of flow coming in there. VIX, I want to talk about this chart as well. They're expecting a big break. We're going to talk about that here in a second. SPX, lots of puts over and over and over. That's all you're seeing here. So going in to bookmap as well on the day, I want to talk about what's happening here. One, you're seeing bearish divergence with CVD. It was in the green all day, and then you were red all day long on the market, right? Bleeding, bleeding, bleeding. You had very good volume also on the day. So you had people trying to buy, trying to push this up, but ultimately they could not. Now, when you zoom in here, I want to talk about the blue line. This is your iceberg, your hidden order book, something that the orders you won't see on the level 2 data, if you will. As we get into this, as you look, you're seeing decent back and forth buying, selling, buying, selling, buying, selling. And really during lunchtime, as you found this low down here, some decent buying. But again, at the end of the day, power hour, once again, you are establishing sell volume, sell volume, sell volume. look, the biggest orders of the day come back into the market and they continue to bet on bad data and a bad overall outlook on the market. So as we go back to what we're talking about over here, going into tomorrow, you have your PCE data. And now I told you yesterday, GDP, if you came out positive at all, you'd probably see a little bit of a bounce. If you came out flat, I still was going to be bearish. And under that, I was bearish as well. Came out flat on growth. And guess what? That marks your second quarter in a row with negative GDP, which signals for most people a recession. However, our government decided to change the definition. However, PCE comes out tomorrow. Your expectation is a 0.5. You came out at 0.1 before, actually missing very bad. If you look at this, we're going to go back to this date, August 26th. Let's go back really quick, a blast to the past really quick in the 4-hour chart to August 26th. What happened on this day? So if we go back to the 26th right here, data came out. You dropped from 419 all the way down in one day to 405 and then proceeded to find lows at 388 over the next week or so. I'm not saying you're going to see that big of a drop tomorrow, but you need to understand what has happened on the market with some of this data being released. Now, it's worth mentioning energy prices have been driven lower. And I know what you're going to say before you even type it in the comments down below. PCE does not include, it excludes food and energy. But you have to understand something about energy. Basically, if energy goes up, everything goes up because you need energy, you need oil, you need fuel to do anything. So energy is indirectly affecting everything. So I kind of think this is silly that they say it excludes energy. I guess it just excludes energy prices. So that's something to think about as well here. So in my opinion, tomorrow is a very interesting day, but we have seen CPI start to go up again as well, even with these rate hikes. So we need to keep our head on a swivel and be watching out. Going into tomorrow, I want to actually mention something about Discord in my trades right now. Before we get into that, I have to tell you right now, 15% off. This ends tomorrow, so get 15% off the whole Discord, the whole shebang right now, everything, just so you know, 50% off for your first month. Going into my trades on the day, I took Amazon. I took Netflix. I decided to go the equity route instead of the index route today, and it paid off. We went from $5 a contract all the way to $6.80. The Netflixes or the Amazons actually, they're at $3.40 when we got in. I ended up actually closing on $3.80. They got over $4, but I decided to close those, and then I ended up re-entering those same positions where we got in at, because I saw the potential to get back in and I actually made a profit on the first bit. So I decided to trade these once again. I'm going to talk about that here in a second as well, going over some of those trades. But I wanted to let you guys know so I don't leave you out of the loop. And I always like to tell you what trades I'm taking either way, so you can know if I'm losing, if I'm winning, if you should actually be listening to this guy, right? So when we get in here looking at SPY, you're at a key level. This dotted line is your lows from June and you're getting back above it. That's worth mentioning. But right now in the after hours, you're seeing NQ get hurt. You're seeing it push back down. We need to be looking and overall just waiting for PCE, because this is going to dictate how we move tomorrow. PCE, that's all that really matters right now. If it comes out bad, you're going to see probably a big drop, just so you know, because the Fed says this is the most important indicator on inflation. So I'm going to go into the next part. The last part of this video, so you know, is going to be stocks. So you can actually skip ahead to look at the stocks that I'm liking right now. But this part's going to be around what's actually driving and some of the key indicators on the market right now. VIX, let's talk about this. So what I want to do is go to the 1-hour chart really quick. And actually, we're going to the 4-hour really quick. So the 4-hour, let's talk about what's happening here. I mentioned when you were down here at $24 that you were extremely bullish as long as you were above this, and you ended up shooting back up to your range of 34. Every major dip that we've had basically over this year so far, you've had a push to this $34, $35 region. However, they all have one thing in common, is you cannot push above this region and hold. However, something is changing, something is quote unquote brewing as we speak, because you continue to consolidate at these highs, just like you were consolidating here. This was out of the normal. You don't usually consolidate on this way up on VIX, specifically with volatility. However, you are right now as we speak. As long as you remain above 30, I think you're in danger for more downside. If you get below 30, you could probably see some relaxing on the market and maybe a little bit of a bounce. So as we jump into this as well, we look at junk bonds, or risk on, risk off sentiment. Again, blood, blood, blood. As we go into about the 15-minute chart, you can see you gapped on the day. You didn't make new lows on junk bonds. However, they definitely got hurt again on the day. These were our lows from June, and you cannot even get a retest of them. Again, this signals for me it is a risk-off environment, telling me that hedge funds do not want to bet on risky assets, which make up most of the S&P 500 and Nasdaq, which are heavily consisting of tech. Next up, the big yield inversion. We keep talking about this. I wanted to talk about this specifically because we're seeing a slowdown here, kind of, right? So in the past day or so, we saw a little bit of a dip, but guess what happened? Almost following our price action tools to a T. You come back to your previous highs, guess what? You bounce, and it looks like the yields are going to keep heating up. You're still inverted. Again, you haven't seen this inversion since previously 2018, the housing bubble, and then the dot-com crisis. And you're in the highest ranges that you've been since the dot-com crisis, so you know. Last but not least, DXY, the dollar. Now, a lot of people were talking, and especially people even in my Discord, and I have to calm people down and let them understand what's going on here. Now, the dollar's been one of the best indicators to show us when stocks are going to continue going down. But today, something interesting happened. We saw a diversion kind of from the trend, right? We saw the dollar dip while indexes dipped as well. What does this tell me? It's important to note with news going on in China right now, there was breaking news specifically, and that's why you always need to be prepared and know what's going on with the news, is because China is talking about selling off their US dollar reserves in order to stabilize the yuan, their currency. Now, what happened? You saw, of course, the dollar start to drop. But you saw an outside influence other than our economy affect the dollar. And you saw the dollar drop while the indexes dropped as well. Just an overall bad case scenario for the entire economy. So sometimes you can't rely on one of these indicators. And that's why I always tell you to look at the market from a broad scale of everything. You cannot just use one indicator. You need to be looking at the whole picture, if you will. I still think the dollar is very bullish. I think it will eventually bounce here. And when this bounces, it will hurt the economy as well. It's also worth mentioning Europe almost hit a recession. Yes, not even a recession, a full market collapse involving the central government from the Bank of England to step in and start buying back bonds, even while they are raising rates. It's almost hysterical, but they had to do it. One thing to mention here is that our U.S. government would almost never be able to do this right now because of the situation that we have put ourselves in financially with all these stimulus, okay? The thing why Bank of America or Bank of England can do this is because why? They did not do $1 billion worth of stimuluses to everyone, okay? It's worth mentioning that right now. So let's get into stocks. I'm liking what I'm looking at. One, Amazon, favorite chart right now, 4-hour chart. Let's look at it. So looking at the Amazon chart, you're in a clear bear flag, in my opinion, and it looks like it wants to tank. Key level to watch, 109 to 110. If you get below 109, you're coming down to 103, 102, in my opinion. I think there's a lot of room to go here. I love it. Absolutely beautiful. October 21st, maybe November 18th. That's the play on options for me. That's what I'm looking at. Do your own DD. Tesla, man, what a play. Remember, we mentioned this yesterday. I'm kicking myself, guys. I'm kicking myself. This is the one that got away. We should have taken it. We got cold feet, the beautiful bear flag right down to support, 266. Beautiful, beautiful, beautiful. Those lows from here. If you break below 265, I want to highlight this right now. If you come up and break, retest, oh my gosh, people, what a trade. You're going to be looking for big, big, big dips here if you break below this. So what I'm looking for here, a break and a retest of this 266, 267 range, and that's going to be looking to get some puts if I wanted to on Tesla, but I'm not looking to get puts while you're above this range right now, or at least until you get a retest of some sort of range. Maybe even 273 is a re-entry possibility. Next up, Apple. A lot of questions about Apple. You've seen what they're doing regarding their number on the iPhones and where they're going from there. You saw a really big dip here as well. I've seen a lot of questions. That's why I want to talk about it. But I want to talk about where you retrace to. It's kind of funny if you really look at it. This morning, you actually tested this area at 146 and then plummeted. Apple, in my opinion now, there is a case to test these lows since the ongoing situation right now. I'm looking at it. I'm interested, but you got to be watching out where you're at and how you're recovering here. I'm not taking a trade in this. I want to be very clear on that. I just don't like Apple here, but I think there's definitely a case to come back down to 130, 129. Just be very careful. Not in love with it. Be careful. AMD, the case for 60. This has been probably the hottest trade in Discord when it comes to equities. J Ream, shout out. You're absolutely killing it. What's happening here? Look at this range as we zoom in on the 15-minute. Look at what's happening. Absolutely disgusting. And we like to call this a drop base drop, if you will. You come down to a range, base, and then you drop again, right? So drop, base, drop, boom. So what you're seeing here, boom, you don't even get a retest of previous lows. You don't even get that. You don't even get the courtesy of that. All you get is a retest of this random range right here. And guess what? Boom, 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 bam. I want to also mention Discord, shout out, Jay Ream. What did he say today? He ended up getting in the AMD position on, I believe he had NVIDIA and then he had AMD as well. AMD is up 100% on the day. He got in roughly on, this is the day, September 22nd. We keep all this stuff on here. We never like get rid of stuff. We never have one bad complaint regarding us manipulating our trades or things like that. So everyone knows we like to be transparent with you guys. Beautiful trade, over 100% there. We're looking for more downside. Ultimate target at 62, and then ultimately the $60 range. Netflix is probably my last trade I want to mention. I entered this trade. This was the trade that we had going on today. We broke below 240 and dropped down to 235. You're retesting 240. If you can stay around this range, in my opinion, you are looking for some nasty downside. So if you stay below 240, I'm looking for a retest of 236, 235, and then ultimately 230. Okay, this is my favorite, one of my favorite trades. Absolutely love it. Probably looking to retrade it tomorrow if PCA data comes out bad. So I know I was pretty quick here going over a few of these things. If you have questions, please comment down below. I would love to answer your questions and go over some things specifically if you have questions or comments regarding the market. Have a good one, traders.